Good afternoon, gang. Welcome to my YouTube channel, philsgang.com, where every Friday I try to give you a little review of the market and to give you an idea where we're going. And that's what I'm going to do tonight. I do this every Friday, and I hope during this presentation you hit like, subscribe, and share. Also, remember you can join the gang anytime for 10 days free, all right? Where you get the membership and the color-coded chart. Let's begin. The stock market has been in a severe downtrend now for 180 days compared to this downtrend for 30 days, okay? This has been a short 30 days because they could drive interest rates low. The yields from 200 down to 85. That was a great atmosphere to move the tech stocks up again. Remember the tech stocks, the last time the tech stocks made a new high was in 2021 November because they couldn't do any more QE because between the inflation and if they were afraid that with the gas going up and food and so forth, if they dropped yields again and to create the money to buy treasuries to drop those yields, gasoline would be $6-7. They couldn't do it, and that's when we had our first 30% drop in the tech stocks in over 14 years. The bank stocks also got clobbered because, again, the banks are in real deep trouble. The corporate debt's the highest it's been. There's a lot of bad loans on the books from corporations. Also, the consumer, he's now paying higher payments. His bank payments are increasing. The banks are raising their rates. And, of course, they're caught with a higher cost of living. So the banks are in trouble because there's going to be more defaults. And that's why the bank stocks dropped. Anytime you get a severe downtrend like this, once you're locked in, and it's going down now for 180 days, compared to 30 days, that's telling you something. What it's telling you is that we don't have enough buying going on in the market called breadth, and that's very dangerous. So if you look here, our breadth right now averaging between the 50-day moving average and the 200-day moving average over these two moving averages right in this chart here, it's about 25%. That's horrible. In order to have a rally like this, you need to have 75% of your stocks above their moving averages. Right now we have 25% of our stocks. That keeps you in a severe downtrend, okay? So when they tell you to buy on the dip, which they always are telling you to buy on the dip, any good news they tell you to buy on the dip, do not do that, okay? You're going to get hurt because you're in a down severe trend. For that trend to change to go to the upside, okay, to make that make that change to go from a downtrend to an uptrend, there's only a few ways that can happen. And one of the ways it is to have better earnings. Well, that's not going to happen. Earnings are horrible, and they're going to get worse. Another way for that to happen is to have QE, okay? And QE is very dangerous too because QE means more inflation. They can't afford more inflation right now. It's killing the consumer. Now there's one other way is called capitulation. That means that you put a lot of fear into the market. People say, just get me out at any price. Get me out, get me out. And when they sell at any price and the selling is done, it's called capitulation. For that to happen, what you need to do is have the VIX go up to 40%, and we're about 28 now. You need to go to 40%, just like what happened in the crash back here. Okay, you got to go to 40%. Once you hit that 40%, the market will crash. Once that VIX hits 40%, panic comes in. Get me out, get me out. And the fear goes up, market goes down, all the sellers are gone, and that's when you get a change in direction because new money comes in. The institutions come in because they feel safe, like right here. See this trend? I'm trying to show you here. You get a change in trend right here only when the VIX hits 40%. There's a capitulation. All the sellers are gone, and only then will institutions come in and pick up the bargains, and you start a new trend. But that's not going to work either because there's too many problems in this market. Okay, it's just not. They're just not going to come in and start buying. Okay, the market has to shake out. It's so overvalued all these years. Okay, the market's got to get back down to about 2,800 before they come in. Now we may get close to that during this earnings season. We got to watch it now in the next couple of weeks. Will the PE ratio drop to 14? They'll get us down to at least 3,000, and that could move us down to 28 or lower. That's what we need to get a change in direction. That's as simple as it is. It's not any more difficult than that, okay? So in the meantime, what you can do, when you hear them telling you, buy on a dip, never buy on the dip in a downtrend market, okay? Don't do that. Today, I'm listening to Kramer, and he's recommending a stock. I want to play this for you.
I'm calling about One Oak, ticker symbol OKE. I'm wondering if I should just keep it for the long haul or take my profits.
Oh, no, keep it. I mean, look, I know I'm good friends. Well, it's been a long time now with Walter Hall.
He's always good friends with somebody. That's his reason for always buying a stock, because he's good friends with the CEO. I'm showing you this because I want to make a point. When you're caught in a severe downtrend, he can know the general of Europe. It doesn't matter. When you're caught in a downtrend, here's the stock. Look at this, solid red. When your stock is caught in a downtrend and your market is caught in a downtrend, you can have the best friends in the world. It's not going to change direction. The only way it's going to change direction, as I said, you got to either have great earnings, you got to have a capitulation, or you got to have QE. None of those right now are in line. They want this market to drop. So the point is that just be patient, and but it doesn't mean you can't make money. We've been making money. Give you an example. This week here, when they dropped the yields, thinking the job data was going to be bad, we've been in the last week we've been buying, swing trades. Very simple. We buy them on the lows right here, and then we sell them on the highs right up here, and then we short them back on the lows again inside a severe downtrend. So the opportunity right now is in these severe downtrends, before you get a reversal through a capitulation, which is not in the books right now, just take your stocks and trade them inside the downtrend. Trade them up and trade them back down. That's all you can do. But you can make some nice returns. The mistake is when people are told the bottom is in, buy the dip. And they get into a stock like Microsoft, and it goes up, and then they put more money on, and then all of a sudden they lose money on the way down. A downtrending stock market is fun to trade. Swing trades are fun because you know exactly what's going to happen. So don't get discouraged because we've been in this severe downtrend, your stock or the stock market. The only way it's going to change, as I said, the only way it's going to change is you're going to have to get 75% of the S&P to be above these two moving averages. Boy, that's going to be tough to do. So continue to learn how to short stocks, and learn how to do swing trades in a downtrend, and you're going to be just fine until it's time that we get a capitulation and a reversal, All right, we'll see you on the charts. Please hit subscribe, like, and share. Check out my membership, free for 10 days. If anything, if you don't stay with me after 10 days, you're going to get one hell of an education how the market works during those 10 days. See you on the charts.